I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
The equity markets are holding on, not doing anything spectacular. And I'm wondering, was the big correction in January and February enough to make the markets healthy again and believable?
Well, I think it was enough to make them believable. Healthy, I won't go so far because it just, it has been, I don't know how to say this, just that one relentless mind game ever since the May high. We had the decline, people spooked into the August low, and we had the rally, obviously into the November high, and then there was a little bit of fear, but then, some averages made a lower low. The industrials, in their case, they held above the August low with the January low, and then since then the market's held up pretty well, and we've been at an intermediate term cycle top, but it hadn't broken. So the sheer fact that it hasn't broken, I think, has given tremendous hope to the bulls, and it's caused tremendous doubt to the bears. But at the same time, the rally hasn't been enough to structurally change anything. I mean, we still have the Dow theory primary trend change intact. I mean, everything's intact. So it's like a levitation. It's like the market is waiting on something, and nothing has really changed. So this situation has ground both bull and bear to the ground, if you will, just through I don't know, doubt. It's made both sides doubt what's going on.
Is there a position a person can take that would take advantage of this position right now?
I think if a person was not in this market, I mean, I wouldn't want to be long because I see the risk, and I think it's too early to be short because we don't really have anything tangible to, with a break just yet out of this intermediate term cycle top. So, we're in limbo land. Now, if we do start to break down below some previous cycle lows, short-term lows that, I cover in the letter and that sort of thing, then yeah, depending on when we break and how we break and what the structure looks like with that break, then yeah, the short side would be, the place to be. As far as the long side, if we were to break out here above some of the previous cycle highs, it would still scare me, while it may change some things and create a short to intermediate term bullish picture. I still think that it would be part of, the topping process that began last May. I'm just not convinced that the bottom from the advance all the way back from 2009 was corrected with that little decline into the recent lows.
Are people waiting to see what the Fed does with interest rates?
I'm sure people are always waiting to see what the Fed does. It's a moot point. It really doesn't matter. But yeah, I mean, people's always waiting on it's kind of comical, but yes, I think they're waiting on the next Fed meeting.
I know the Fed said that if they do hike interest rates, it'll be based on the economic data they have. Well, so much of the economic data is negative. Ford and GM sales down, some of them quite sharply. Other economic indicators also down. Yet they say we're waiting for economic data. What more do they need?
Yeah, I know, and some of that, one of their best tools is the ability to jawbone the market, and maybe they're trying to convince people that the economy is better than it is, and that they can get a hike in. And I think maybe that hike, it's just me. I think they're playing the market, and I think that hike, should it come, would be to get another round in the cylinder so that they'd have a cut down the road. You mentioned the automotive sector. I'm looking at it. I pulled up a chart, right, just of the automotive manufacturers sector, and it looks, while it's held up, it's like everything else. It's in limbo land. It looks bad, but it's left with negative structure. And when I say negative structure, we had the high back, last year. In this case, it was in June, and since then we've had a series of intermediate degree lower lows and lower highs and lower lows and lower highs, and now it's trying to roll again, but it hasn't quite done it. So it's been, like I said, just enough decline to spook the bears a little bit, but then it's been, to spook the bulls a little bit, but then it's held up enough to confuse the bears. So we have this kind of neutral situation, and I just don't think it's over. There are some sectors that look far worse than the others. The transports look horrible. The industrials is probably one of the better looking sectors. Last time I looked at the airline sectors, it looked pretty bad. It had been hit hard. So I don't know. I think the jury is still out, and the cattle have not spooked yet, but I still, Jim, I think that there is a surprise out there. I think something's coming.
When you say the cattle not spooked, most people, of course, don't bother to buy stocks until it's almost at the top, when, of course, you're supposed to buy low. Why is that?
Well, because it's the herd mentality. People are people. It's just like they don't sell till we get to a bottom, and that's what fuels the the decline, and where you have the capitulation. What I think is going to happen, I know you said that a lot of people, and there seems to be some chatter about a lot of people being a little leery of the market. And you say a lot of people in Canada are out on the sidelines, so to speak, and that they see the dangers. But obviously there are people in the market, and I think what's going to happen with the remaining bulls is I just see this setting up to it's just, I don't know if it'll happen or not, but this is what I think is probably coming to ultimately crush all of the bulls, is that, it starts down, and we've been trained. They've been trained like Pavlov's dog here. We have, we get a little, 10% correction, and it rallies back over the next 3 or 4 months. And then we get a little correction, and it's been buying opportunities. These have been buying opportunities. In effect, even though we haven't made a new high, we've recovered. And we've done this 3 times. Or twice, I should say. We're in the process of maybe doing it a 3rd time. And so people have been trained to buy the dip. And that's just an extension of the training they got ever since 2009. So there's no fear. And the ones that are left in the market, I think what's going to happen is if we do get a break, we're going to go down, and they're going to think that that's coming, but it doesn't. And they're going to say, well, I'll get out on the bounce. I'll get out on the bounce. I'll get out on the bounce. And then no bounce comes, and they're trapped. And then there is a mass selling, mass exodus, and I think that's how we get the capitulation out of this extended 4-year cycle top.
And again, too, now it's been almost 7 years since a major correction, or what would be a major correction. Have the younger people in the business again felt bad things cannot happen?
I really can't speak for them, but I suspect that yes, that is correct. And it's just like, the Dow theory, for example. That technical analysis in general, Dow theory in general, has become disbelievable in a sense that people say, well, you say this, but the market holds up. And it's not just, not just myself, but, if someone's looking at Elliott Wave or whatever they're looking at, the technical analysis has been somewhat discredited because of the, how well the market has held. And, of course, we know it's held because of, the concerted efforts across the globe by the central bankers to hold it. And that's not making excuses. I mean, that's just the truth. But they have extended the cycle, and so people people are not believing or understanding the risk associated with the setup, and therefore it's just human nature to discount, for example, the Dow theory bearish primary trend change that's been in place since last summer. I mean, I get that. Someone look at that and go, oh yeah, well, whatever. They discount it. I get it, but it's there. And then knowing the history of Dow theory, knowing the history of these statistics, knowing the history of the technical analysis of what I'm looking at, the risk is like I said, is still very much there, and I respect that risk. And until we see something to negate that setup completely, and I don't mean just treading water here like we have the last several months, then the risk remains.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the situation with gold right now?
Well, we talked about gold. I said that I thought that the advance out of the December low was a counter-trend rally within the context of, the finishing up of the 9-year cycle low that I'm looking for later this year. I think the last time we talked, I said that I thought we were at some sort of, pushing into an intermediate degree top, and that has happened. I mean, we've actually broken below the last intermediate degree low, which is structurally a very bearish thing. Short term, we should be at or near a low. There should be a bounce coming in gold, but I think intermediate term. I think any bounce should be short-lived. In intermediate term, we should see a continuation of the downtrend as we look for that 9-year cycle low later this year.
When will that happen?
It's hard to say until we see the cyclical phasing come together. I mean, it's too far out for me to give a day or date. And that's not being evasive, but there is a clustering of cycles. There's a short, intermediate, and a longer-term cycle that all has to come together. I'm looking for it. I can give you a general time frame at this point, but I'm looking for it sometime in let's call it October to March. Let me give you that. Sometime late this year to early next year is where I'm looking. As we move toward that time frame, toward that window, then we can, hone in on the timing a little closer, probably a lot closer. But right now I'm thinking, like I said, I stick to the late 16, early 17.
It seems to me when we do have big breaks in the market, it's happening a little earlier than traditionally. So I look at the example of last August 24th when we had the monstrous drop in the equities. Of course, that was in August. Usually these things happen in October or November. And I can see if you say oil or gold is going to pick up in October to March. Well, if we have an early dump in the equities in August again, of course, October would be probably a time where you'll see more investment in gold.
Well, like I said, we're too far away to give a real definite answer. But and what I mean is there's an intermediate term cycle. For example, we know that the intermediate term cycle bottomed in March. And we know that it ranges in time between, and I don't have it in front of me now, but I'll just give you an example. Let's say that it ranges between, 16 and 24 weeks. Well, you calculate out 16 to 24 weeks, but then there's some ends you have to work to the middle. There's some shorter term cycles, and we know that cycle is going to bottom in conjunction with the shorter term cycles. There's the oscillator picture. So there's a number of things you have to knit together as the picture comes together. And then I don't think the low is going to occur with this next intermediate degree low. I suspect there's going to be one more. So we're out far enough that I don't know exactly, but I know the general time frame in which to expect it. So a little clarification there so people know that like I said, not being evasive. I just can't, pinpoint the bar at this point.
Crude oil prices, of course, have seen a huge rally from $26 to $50. Is this rally going to continue?
Well, we've talked about that too. It is there's a seasonal tendency. We knew that we had literally the seasonal annual cycle low in crude oil in place back in February. We knew that was an intermediate degree low as well. We knew that was a short-term low, and that's exactly what I'm talking about a clustering of cycles. It's that clustering of cycles, just like that we're looking for in gold later this year. But it's also going to be of 1 degree higher because it's going to be of the 9-year cycle low. So anyway, just an example. But yeah, we knew that clustering of cycles had occurred, and we knew that crude oil, also there is a seasonal tendency for crude oil to rally in the summertime in the driving season. And, sometimes you see that crude oil will peak during that driving season in May. Sometimes it's June, July, or August. And those are just tendencies. They're not hard, fast. You can't, put a date on the calendar and say this is going to be the top. But it's a general time frame. And it, make bottoms late in the year, early in the year, and then rally into the summer. Well, we're into the summer now. And looking at it, the indicators, everything looks like that we're getting in the kill zone, so to speak, for an intermediate and seasonal cycle top in crude. We don't have that yet. I think that's trying to form. We need to see structure now. Like I said, the price oscillator picture, if you will, is ripe for that top, but now we need to see structure to confirm the top.
Well, I know the demand for gasoline is stronger than people expected. Is that because we had an early start to the driving season?
It may be because of the price of fuel. I mean, I don't know the fundamentals behind that, but I would say that it's because of the price of fuel. I mean, gasoline's cheap.
And why not use it while it is cheap?
Exactly.
Because I noticed that crude oil inventories themselves rose as gasoline was driven down. Also, China is always kind of, I want to say the bull in the China shop, but is their economy as bad as some people have said? I mean, they still expect 6.5% growth. That's the official figure. And China always meets its official figures. As we know, they're highly manipulated. But are they still doing better than a lot of people think they are?
I have no idea about China. I don't follow China. I don't know. I honestly cannot say. I know. Well, I don't know. I don't know, Jim.
If people were looking at what's going to be hot in the, say, intermediate future, is there any one area that they should be looking at?
Not that I see. I think that the thing that I see on the horizon is a little bit, like I said, on the horizon still, and that's gold stocks. I think that once we get this 9-year cycle low in place, I think there's going to be tremendous opportunity with both the precious metals themselves and gold stocks. I realize that the gold stocks have had a nice pop. I get it, but like I said all along, I felt like this was an intermediate term rally, and I said that we were at least going to retest the lows, and gold stocks may not violate the lows. They may hold here, but there's a retest. We do have an intermediate term sell signal there, and once this higher degree low in gold is in place, then I think the opportunities will be gold and gold stocks.
Tim, thank you very much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Any questions or comments for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.